While some online bullion dealers continue to charge $4 over spot for US Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, it's been a huge week for the metals, and the bankers tried to take gold and silver down this morning. A big raid on the jobs report, both gold and silver. Silver was hammered all the way down below 1920. Gold was it was pretty clear that their intents were to trigger the stops below 1350. Once that happened, gold plunged all the way to 1335. But buy the dip, traders did, and both gold and silver recovered all of their smash losses pretty much an hour, and then after a little bit of a sideways trade here, have really the whole rest of the COMEX session and throughout Globex trading here this afternoon, gold and silver have continued to climb. Silver trading in the Globex session here at its highs, closing in on 2030. Gold in the Globex session is trading back above the Brexit high of 1363. I have a last of about 1366 here. So very impressive trading here, not only for the week and all the big strong moves we had, but it's how you close the week that matters, and very impressive trading here for gold and silver to close the week.
Yeah, so much for the summer doldrums. Goodbye and good riddance. What's really amazing about the stock market this week, and today in particular, you see this big jump up after the employment report numbers, which, though I haven't dived into very deeply yet, I can tell already that this is just really suspect. We'll get to that in a moment. But what's really interesting is that, we probably have a bit of unwinding of yen carry trade and the flight to safety move going into the yen versus assets that are, dollar-based and European-based more so, being sold, equities, and the unwinding of the carry trade that helped fund the purchases of those equities. And all the while, you have this kind of head-scratcher where, the S&P 500 today is making a new all-time high, and at the same time you have gold moving up and the yen going up because of this unwind of the yen carry trade as part of the the overall process of fear unwind in the marketplace. Oil is crapped out today as well. You would expect that to go up based on assumptions of economic activity improving, but again, the unemployment numbers are just bogus. And here we are looking at the S&P 500 making new highs today. And earlier I had expected the S&P 500 to more clearly be rolling over by now, and this goes back all the way to the conversations you and I were having in the fourth quarter of 2014, and we have seen the S&P 500 roll over, and it has done a couple of fear spike downward spasms. We had it in 2015 with the whole Shemitah period in the fall, and China also doing their surprise devaluation and setting off fireworks within the FX markets, translating into huge volatility across the board. But and then we had December. I think it was December 16th, if memory serves, when the Fed did their one token rate cut, and then for the next 2 months, people were foaming at the mouth and frothing with fear about how the whole normalization process of interest rates was going to happen. And so, we have seen the market start from that, 2015, mid-2015 onward roll down. And here we are again, where, the official sector, frankly, I think the majority, or at least a portion of what's going on today in terms of stocks is really just central bank buying. We can't prove it, but what else makes sense when we look at markets that have all these internal contradictions? So I mean, it's a fascinating day to be looking at market dynamics, because we see a lot of average investors over the last couple of months having sold out of mutual funds, and the mutual fund withdrawal data has been hitting an accelerated clip. And then here we are, the stock market's still going back up. And I think we know why it's going back up. It's because the powers that be are juicing the markets. This is monetary expansion impacting the reflation of financial assets in the equities market. But at the same time, the far larger, bigger bond markets are telling the true story of what real-world capital, not fantasy capital at the hands and the beck and call of central bankers, are in fact expressing in the marketplace. We can see it today. Ultimately, it's going to be a lot more of an impetus for people to wake up and start seeing the unfolding gold bull market before us, with negative interest rates increasingly becoming the norm, with Holland joining the club today for their 10-year bond. It's just going to be an evolving understanding amongst the conventional financial world that the Fed and all the other central bankers do not have their backs, and that we're in the process of an end game. We're going to accelerate as well too, and see a period of punctuated downside movements as more of this understanding seeps into the consciousness of global financial managers who are still largely still in denial. But contradictory moves in markets like what we see today are very telling, and I think that though we can't ferret out exactly 100% of what's going on, I think the rough contours of what I'm pointing out does speak to general themes of central bankers supporting the market, most participants in the conventional 95% of monies managed in the West believing that the central banks still have their back, but that's in the process of falling apart. And that's why we're seeing the gold market do what it does.
In the short term, today's trading action is reminiscent of how gold and silver closed out the week last week, Eric. It almost seems like we're having the same conversation, and I'm sure the listeners are very familiar with what happened on Sunday night once China came online. So what's your take here? Are we setting up for the same type of gap to the upside? Markets reopen on Sunday. I mean, gold right here closing at the highs certainly would have to think a challenge of 1,400 is imminent. And if silver can get back above 2050, I would have to think it's going to move to 22 fairly quickly.
Yeah, since silver had its consolidation over the last week and a half or so, and once it got over 20, it was attacked pretty viciously. And now that we are regaining that and doing it in a very large outside reversal pattern, I mean, it's like you said, we've seen a number of these in the last couple of weeks, and I don't think it's a foregone conclusion that we'll see an upside spike on Sunday or whatever. But next week is definitely going to, when we record next week this time, we're going to see a lot higher prices, and I believe that silver 22 is definitely in the short term offing. I mean, it may be tested next week. It's hard to tell. I frankly can't tell. Sometimes it's easier for me to be able to tell short-term moves in terms of exact price targeting and get reasonable probabilities of those kind of outcomes, maybe 80% or better. And that's pretty good for being able to target markets on a short-term basis. But I don't think I can see, not plugged in enough today, frankly, to be able to tell what's going to happen on Sunday, Monday. But as far as the slightly longer term of the entire week, this momentum is going to signal to everyone and their dog that's paying attention this weekend that the gold bull market and the whole geopolitical underpinnings as well as the global financial underpinnings all point towards much, much higher gold prices. And, the powers that be, the media, et cetera, is all going to be trying to poo-poo what's going on. But more and more people are waking up, and that's the bottom line.
Let's talk a little bit about the wholesale market and what we're seeing. I just took a look at the U.S. Mint sales numbers for the week, and I was rather shocked to see that the U.S. Mint is only reporting 250,000 Silver Eagle coins sold for the week. And granted, they were shut down on Monday for the 4th. So their capacity for the week would have been about 750,000 coins, but effectively the Mint is reporting that they only sold about a third of their allocation production for the week, and on a week when we saw absolutely explosive demand at SD Bullion. I mean, we had by far the highest one-week sales in our history. I mean, we had just SD Bullion, we sold probably well over 100,000 of those coins. So that tells me that the hypothesis that we've been discussing, that a lot of these wholesalers and primary dealers spent the first quarter of 2016 stocking up on as many silver coins and silver bars as they could, so they're best prepared for a shortage scenario, really is the case, that even into this massive demand that saw here this week, a lot of the wholesalers and APs are basically just selling out of their inventories and aren't yet replenishing from the Mint. So, but again, it really won't take too long, I don't think. I mean, if this keeps up for a couple more weeks, those stockpiles, I would imagine, would start to draw down here, is really my take on the market. We'll see. I mean, both Silver Eagles and rounds at SD Bullion, we've been seeing some of the lowest wholesale premiums offered to us that we've ever seen on the market, basically pennies over the distributor's mint cost. It's great news for silver investors, at least right now at this moment today, that you're not paying $4, $5, $6 premium per ounce over spot to go along with jumping silver spot prices. So it'll be interesting to see as all the ramifications and implications from Brexit continue to play out. Italy's banking crisis, Deutsche Bank nearing single digits. As we head into the fall, it'll be interesting to see how those factors play out, and combine all of those financial system factors with gold and silver now clearly in a new bull market, and the attention that's going to attract from those who are not just the diehard gold and silver bugs who have really been the only ones buying for the last probably 3 years. Even though that the wholesalers have built up some inventories here, it won't take much at all to blow through that.
Yeah, it's definitely going to be an interesting summer. Things are definitely heating up, and at the same time, people are responding. And I don't know if you caught that humorous clip that BNN broadcast as far as their interview with Jeffrey Christian talking about Keith Neumeyer, CEO of First Majestic, being more conspiratorial-minded in his analysis. That, this whole Brexit stuff and theories about manipulation are just all a bunch of hot air, and we can always turn to Jeffrey Christian to point all of that good stuff out.
But bashing Keith Neumeyer and First Majestic and calling the First Majestic investors conspiracy-minded types. He also, as always, tried to talk down gold and silver back to zero, saying, well, it won't be long before silver's heading way down from $20 an ounce. And it's just, it's always entertaining to listen to him talk. It's almost enjoyable.
And First Majestic has moved from, about 250 or so at the lows in January all the way to north of, I should pull it up and get today's quote, but it's over $15. Let's see, it closed at $15.97 today, up a strong 7.54%. Just shows you, the leverage that comes with silver miners when silver moves. So I think Jeffrey is just a little bit ticked that he's not in the stock.
And for disclosure, we're a little bit biased. Besides the fact that we're big fans of Keith Neumeyer, and we've had him personally on the show before. I think you and I, Eric, are both shareholders in First Majestic, so we believe in his company too. I
am, yes. It's a very big holding, and Keith Neumeyer is a great manager, and also his analysis of the world isn't much on target, to the chagrin of Jeffrey Christian, but Christian is predictable. That much is for sure. So, we got a lot of stuff coming up this summer. We got the elections on the horizon, and the shooting that happened is a little suspect. There was a Facebook page that was put up claiming responsibility for it, and the group wrote, and I quote, "Sniper assassins take down 5 police officers, ! And more will be assassinated in the coming days. Do you like the work of our assassins? Get your sniper rifle and join our thousands of sniper assassins worldwide in the fight against oppression." And, it was only a couple weeks back that Larry Nichols was on the Greg Hunter show and talking about how this summer was going to see a lot of a high probability of a lot of events that could stir things up. And one of the examples he gave was the fact that it would not be very difficult to get a bunch of very well-trained people to start shooting and causing turmoil, kind of like, San Bernardino shooting. But I mean, this operation was a little bit more sophisticated because the guy, is basically a sniper. But the deal with this Facebook page, I mean, how many worldwide political revolution movements have you heard put up pages like this sounding like some kind of a cartoon? I mean, it's just, this whole thing smells like a black op, to be perfectly blunt. And I don't have any basis for saying that other than the fact of the weirdness of the story and the way it's unfolded, because I haven't had a chance to dig into this yet. But, the summer months is going to kind of repeat what happened in '68, frankly. I think we're seeing kind of an echo of the summer of '68 and all the turmoil in politics. We have a completely different kind of context in the United States today versus back then, of course. But we have a tremendous amount of disaffected, pissed off people who realize that what we're being told in terms of what is in fact reality per the mainstream media and all of the propaganda that's being shoveled to us is just not reality. We see it in the financial markets, we see it in politics, it's everywhere. And I think things are coming to a head. And I think precious metals are also reflecting this too. It's part of this kind of unraveling of the overall system, frankly, from a financial and cultural point of view and political point of view. So we have that. We have the geopolitical frame is an ongoing question mark and adding pressure to the probability of much higher gold prices as well, too. We have the NATO conference going on now, and the United States is continuing its efforts to paint Russia as the new evil empire, and the effort of rebooting a Cold War is well underway. A very large percentage of the American people have completely bought into this, and the policy establishment as well, and politicians are just kind of parroting along the military-industrial complex's script. I'm overgeneralizing, but that's really what's going on here. We're seeing a rebirthing of a Cold War to try to maintain the whole global Western Anglo-American spearheaded, dominated financial, geopolitical empire. And things are unraveling around the edges. And as that process continues from both our domestic politics as well as the thrashing of an empire in decline on an international stage, those two are interlinked with what we're seeing in the financial markets. And this summer, things are going to continue to boil over. I don't think, I have consistently been of the view that the conventional financial world has to fully break down and no longer believe that the central bankers have their back in order for us to see the final capitulation and to see us go into this kind of like a 2008, March 2009 spiral downward in terms of a rapid escalation downward for the standard equity markets and for eventually gold and silver to shoot up higher as well too. They won't have the initial drop that we saw in 2008, frankly, and I think people like Dent have his whole deflation thesis completely incorrect because he is underestimating the degree to which solvency concerns will enter into the minds of investors very quickly this time around, because the game context is completely different now versus what it was in 2008, because we've already seen a gigantic transition towards central bankers putting on their balance sheet the socialization of the losses of the financial sector from the 2008-2009 crash. That is the fundamental difference this time around that prevents the system from being saved exactly the way it was the previous time. Dent doesn't understand this. And, well, maybe he does, but doesn't really ascribe the appropriate weighting or assessment value to that element. And he just thinks that we're going to see fear trade dominate. So, anyway, bottom line is that I think this summer we're going to maybe see about maybe 2 months or so, maybe a month more of the S&P 500 continuing to see it juicing upward, and that's surprising to me. That part of my overall assessment of where this whole cycle was be playing out is definitely incorrect. I'm very surprised that the stock market is being able to be levitated as much as it has been. But other than that, I think we're going to see, this summer continue with a lot higher prices in gold. And earlier this year, we were talking 1,500 being eminently doable by December, and that now actually looks conservative. And
doable by August to me.
Yeah, it's definitely doable. And taking out the old highs even this year is definitely doable. Although it probably will, spill over into 2017 for that. Gold getting over 2,000 and silver over 50.
All right, maybe we should just keep the rant going, Eric. Silver was melting up while you talked here. We're closing in on 2035. We'll make it a wrap there and wrap up the show. Definitely keep an eye on markets Sunday night and into next week. I predict an exciting week again for gold and silver here. Really encouraging to see them closing at their highs just about for the week, both gold and silver. And especially after the brutal takedown they experienced on the jobs report this morning. So really has been impressive to see how vigorously the dip was bought both in gold and silver. So should be an exciting week ahead next week. And if nothing else, welcome to volatility in gold and silver markets, that's for sure. All right, so for the Doc and Eric Dubin, thanks for tuning into this week's SD Weekly Metals and Markets.